without spending any more time, I would like to now invite our MD and CEO, Mr. Amitabh Chaudhary, to open this Analyst Day with the opening session on GPS execution. Thank you.
Just a second, let me just set this right. Hi, good morning, everyone. Such a pleasure to be amongst you. I think we've been planning this for some time, but somehow COVID ensured that we could not have this Analyst Day. And frankly, I'll be very honest, it also gave us time to come to a point where we could maybe share some good news with you rather than being asked some very tough questions over a period of time. So it worked out quite perfectly. So what I'm going to do over the next 45 minutes is to walk you through our journey over the last 3.5 years, maybe throw a lot of metrics at you, and in the process try to demonstrate to you as to what the calibrated strategy has been, how it all fits together, and also hopefully weave in what you can expect to hear in the sessions which will obviously take place throughout the day. I can't let this go. When we had launched GPS, which is our growth, profitability, sustainability strategy in Jan of 2019, we had talked about the fact that we have an aspiration to hit 18% ROE. We knew that 15-16% was visible, and we knew how to get there. 18%, we always used to say 2%, we need to do a lot of work, there are a lot of projects which need to work, a lot of things need to come together, and we can get there. We delivered 18.9% consolidated ROE, so we have achieved it, and now we intend to sustain it. We have also delivered 3 quarters of 15+% ROE, so it is not just one-time wonder. Hopefully, we'll intend to stay here, as I said, and we want to stay here. When we had talked about 18%, we had always said there are 3 important vectors for us. We had said we need to hit a NIM of 3.8%. We have crossed that. We talked about cost to revenue being lower than our long-term average. That was below 2%. We're not there as yet. We have touched it, but we went back up, and we'll talk a little bit about that later. And third was that our credit cost should be lower than the long-term average. It is way below that. And obviously, because our credit costs are way below and NIMs we've achieved, it is obviously delivering the 18.9% ROE. Obviously, 3.96 was an important achievement for us. Now, if you look at this slide, we are going about our strategy in, I would say, let's say 3 phases. Our first phase was to fix our balance sheet and strengthen the balance sheet. So you will see how our CET1 has moved, how our PCR has moved, how our net NPA has moved. And this has come about not only by fixing the balance sheet, we also fixed our processes, compliance, controls, conservative policies, and all of that. So it was a mix of writing off whatever we could, fixing our risk guardrails, fixing our processes, becoming more conservative in our accounting policies, and so on and so forth. The second was about fixing the P&L. And the fixing the P&L was about obviously getting the NIM right, but also moving the fees towards more granular fees. And when you look at the NIM or the core operating profit, you will see the numbers move up. And third is obviously lifting the growth momentum on both on the asset and the liability side. On the asset side, we have clearly demonstrated that the businesses we like, which give us high risk-adjusted return on capital, we can. We have done that on the retail side. We have done that on the CBG side. We have done that on the segments of choice for us on the wholesale side. But there are parts of wholesale segment which are not grown. There's something which you need to fix. We are seeing green shoots, and when we do the sessions on deposits, you will hear what are the green shoots we are seeing. You will see that the momentum on the deposit side has also started, but we need to do much more. We fully acknowledge that, and hopefully we'll demonstrate to you through the day as to why we believe and why we are confident that that will also get fixed over a period of time. I have put up here what are some of the goals we listed in GPS strategy in 2019. And we believe that now we have surpassed the goals we outlined in 2019. As I said, this has been at the back of deliberate, calibrated strategy around, I would call them 4 steps. And very easy to explain, or what I say 4 steps in a ladder. The first very simple step for us was to flex ourselves, which was just to say that, can we just work harder, be more aspirational? Can we get a rightful share when we are lending so much of money? Can we go and talk to a corporate about actually giving us some fee business? And why are we not getting that share of fee business? And things of that nature. So one was just about flexing. The second step in the ladder was about excellence, which was about looking at your processes, making them more efficient, looking at controls, looking at fixing basic things in our customer journeys or our interactions with our distribution partners and so on and so forth. That was excellence. Third was around transformation. We keep talking to you about how many transformation projects we have in the bank, and I'll show you a glimpse of that later in the presentation, and how they are helping us to make a difference in the marketplace. And the last was, how do we now start moving towards what I call setting benchmarks in the industry? Are we in businesses, in the way we are attacking certain businesses, in the way we are using technology or analytics or digital, are we setting benchmarks which others are trying to follow us on? And that was a fourth step in the ladder. And today, hopefully, we will spend more time on the fourth step on the ladder, say third and the fourth step, rather than talking about first and second, because I do believe most of the first and second we could do is done. It's not that the journey will ever be over, but most of it is done. And this is the kind of data which shows up in terms of profitability. The reason I was talking for a longer time is you could look at some of the data which is already there. And, this is some more metrics to highlight the progress we have made. Customer acquisition is quite strong. You look at this new savings accounts open, it's up 61%. You look at new liability relationships added, up 43%. We have, we've taken new products to the market to enrich our segment offerings. We have now partnerships across fintechs and platforms. And there are multiple transformation projects at play. Almost every business which we are interested in, there is some kind of transformation project at play. Continuing on this journey, this has obviously, on the retail side also, our disbursements have picked up, driven by higher productivity and use of digital. So our overall retail assets are up 2 times. For example, our small business banking, which is just below our SME business, is up 4.6 times during this period. And you will see that we have used financial year 19 as the benchmark, and from there we are trying to show what journey we have traversed since then. Same applies to credit cards. We looked at our credit card business. We reduced the size of our corporate card issuances because it was not making money. We fixed that. Our share came down, did not matter. We launched a transformation project on credit cards called Zenith, and look at the numbers which are trending now. Very clearly, our source of what we call known to the bank customers, these are not customers who have an account with us, but we know or have some data around them, has gone from 6 to 31%. This obviously includes the partnerships we have with Flipkart, Google's, Airtel's of the world. You will see that our share in retail spends has gone up by 160 basis points after falling during the COVID period for some time. And the card advances since the Citi acquisition are up 43%. I also believe that it also demonstrates, this is one example, when we have identified a segment and we decide to go after it, and I'll give you example after example today. Axis Bank has very clearly demonstrated that they can go and start delivering. Credit cards is one such example. There'll be more examples we'll share with you as we go forward. Even on the CASA growth trajectory side, and I know we get beaten up for this, from March 20, it is showing a clear uplift. And I'm the first one to admit we are not there where we want to be. But you see the data from March 20, there is a clear uplift. We have gained market share, and while in the afternoon session we'll give you more insight as to why we believe this will continue, but very clearly our incremental market share on the CASA deposits in the last 1 year is 6.5%. Our period end market share is 4.8%, so kind of on the incremental side we're doing slightly better. And this is a demonstration of what we're really trying to do. We have gone district by district by district in the country and looked at what our total deposits market share was, what is the term deposit market share there, what is the savings deposit market share there, and you can see the movement in terms of how our share of the market has changed during this 3-year period. So it's not just about saying, we want to go and get more deposits. It is actually going district by district and asking ourselves the question, are we making a difference? And where is the difference coming from? And how will that difference come from? Again, when Ravi does the session, it will tell you very clearly. But you can see that in the total deposits, there's a 35% increase. If you look at our term deposits, there's a 58% increase, and so on and so forth. And this is all data from RBI. This is not some self-generated data. Here's another example of what once we have decided to execute, how well we have done. And apostrophe where we demonstrated unparalleled success, even though there were other banks who were present and have been trying to make a success of it for a long period of time. Look at what we achieved in Burgundy Private. 30 of the richest Indians now bank with us. There's 89% year-on-year growth in our Burgundy cards which have been issued. It is one of its kind card. Still no one has it. It's the only metal card which is now, in the industry. It is growing at a 26% CAGR. And obviously, when Citibank comes into our fold, it will make us a very, very second largest wealth management player in the country. Another example of how, and by the way, this was launched in November 2019, November 2019, my apologies. We launched in November 2019, just before COVID hit us, and how far we have come during this pretty tough journey. I also believe that we have changed what we are seeing as in the wholesale banking side. We have perhaps the best and the most comprehensive wholesale banking franchise in the country. We have turned this around in a record time, best-in-class relationship-focused bank, and you will see some of the awards we have won. We are the only Indian bank to win the IFR Asia of the Bank Year Award in India. It also obviously, our focus on fees has brought about a sea change in terms of the quality of the fees which is coming through the wholesale bank. You will also very clearly see that there is a 540 basis points increase in foreign LC market share. We continue to be innovative. We have shown you examples of first Indian private bank to do a SOFR linked trade financing, first blockchain-enabled domestic trade. We have always been a leader on the DCM side. We remain a leader on the DCM side. So again, a sea change in terms of how we are perceived as a wholesale bank. Now, again, in the afternoon, we'll showcase to you, morning, afternoon, we'll showcase to you what are we really doing in terms of clear, demonstrable technology transformation we have brought about in the wholesale banking products and why it is leading to real success for Axis Bank as we move forward. This continues even on the subsidiary side. We have created significant value in our key group entities. Our profit CAGR is up 51% during this period. If you look at the combined net worth, we have now 5,641 crores of combined net worth, and our return on investments is now 46%. Again, the subsidiary CEOs will come and present you very briefly in terms of what they're doing, what they see the future as, etc., etc. People push us on return on equity and ROA, and here also the journey, if you plot it over the last 4 years, is quite clear. Our ROAs have continued to improve. We have shown you the early data and obviously the last 3 quarters data. And you will see a clear secular increase in terms of what we are delivering to the market. So it is not one-off. Everything which we are doing in the bank is for the long term. Every decision is based on the fact that will it be the right thing to do in the long term? And as we very strongly believe that if we keep doing that, the numbers will come. And they've started coming. So it's good to see that. And same thing applies to NIMs. Our domestic NIMs at 4.08%. Have gone up, and you see the journey, in spite of the fact that we have brought down our risk-weighted assets from 72% to about 65%, 66%. So in spite of such a large reduction in risk-weighted assets, we have pushed our NIMs up. Obviously, it has been brought about by the hard work which we have done on the loan mix. There's the hard work which we've done on the low-yielding RIDF bonds, and a lot of the other work which you've done on the LCR side. Again, I'll leave it to the others to expand more. But a very clear demonstration of when we have put our minds to it, if you look at the numbers here, a clear trend and a secular trend. It's not, up and down all over. Same with fees. You look at the trend in fees. Our retail accounted for 45%. Our credit fees, corporate and SME credit fees, was 21% in financial year 16. Look at where we have reached now, 6%. That 21% has become 6%. Retail is now 67%. You look at the trade, forex payments, wholesale banking products now account for 26% of the fees. Again, we have slowly, gradually changed the nature of the fees which we are earning at Axis Bank, so that again it is secular. It will come to you every quarter if you keep trending right in the marketplace. And it is a 1,900 basis points change since financial year 16. It's not a small change. Our balance sheet is robust now. If you look on the right-hand side, an important trend which is emerging for Axis after a very, very long period of time, entire growth in this year has been supported by internal accruals. This has not happened for Axis for a long period of time. So slowly, gradually, forget about Citi transaction for a minute, Axis Bank is generating enough accruals to be able to fund its growth. And that's important. NPA levels are lowest now, and non-NPA provisions we hold on our balance sheets are among the highest in the sector. So kind of that further adds to our balance sheet strength. We are developing a winning mindset, and it's very important. I very strongly believe that every part of the bank should be out there trying to win awards, not for the sake of winning awards, but for the process of going through winning awards, because that's when you learn a lot. It all happens over a period of time. So, and we also see this as a great way to get external validation. This is a start. I believe many more will come, but this just gives you a feel for the kind of awards also which Axis Bank has been winning because of all the hard work we have put in. It's important you understand that. We are the highest rated mobile banking app in the world today. This is highest rating on Google Play Store. Our rating on Apple is 4.6, App Store. 15 lakh plus reviews across 59 global banks, 8 global neobanks, and 50 Indian fintech apps. It is the largest branch for Axis. 65% of service requests are coming through this. 250 plus services are available. 20 million customers are registered, and now more than 10 million monthly users are coming on the app. Our app was good. Now it is scaling new heights. And again, we'll demonstrate to you in the next session itself how we have brought about these changes to get here over a period of time. It is not one-day effort. To continue to improve your rating and get to 4.8 is a lot of hard work. And so what are some of the things which we have done to get there? Sample of transformation projects. Triumph is the liabilities project. 220 basis points improvement in our premium retail mix. Zenith, I talked to you about the credit cards project. Card issuance, we're doing 1 million card issuance for the last 3 quarters, every quarter. Unnati is our retail assets project. Sankalp was the SME project, and again, in a session we'll talk about it. Neo, I mentioned, it's a wholesale banking products platform which we have created. You will have a session on that. Bharat Banking, you'll have a session on that. Kanban is a project which we're doing on merchant acquisition. Our ranking has moved from 4 to 2. We'll talk about some of those numbers again later on. Siddhi, we will demonstrate to you what Siddhi is. I think it's a very unique vision which this bank is working on. And by the way, it's more like a 24 to 30-month project we've been working on. So we have reached a certain stage. We'll showcase with you as to what Siddhi is all about. And Branch of the Future is another project where we're trying to reduce the times from being spent by our branch folks on operational matters and make it more sales-centric, make it more customer-centric. We've taken huge steps to overall the risk culture of the bank. We remain open to obviously capturing and capitalizing on every opportunity which comes our way, but we are also very clear that given the size of the market share we have, we can continue to afford to be maintaining our risk guardrails where we worked very hard to get to. You will see that we have done the risk management tightening across financial risk, or balance sheet. We have also done a lot of work, hard work on the digital and the ESG side, and non-financial risk management. So on the just the ESG side alone, we have pioneered ESG development. We're the first bank to constitute an ESG committee of the board. We are actively exploring decarbonization in banks' own operations aligned to the science-based target initiatives. We are also developing a risk model with IFC Washington to be able to evaluate ESG risks, and that hopefully will be rolled out within the bank very, very soon. So a lot of hard work going on in the ESG area. It is not just something we are ticking the box for. Very quickly, and I want to cover each of these parameters in a slide each. How are we creating best-in-class digital technology and data analytic capabilities? There'll be much more in session later on, but I'll just give you a quick brief there. How we are focusing on high risk-adjusted return on capital businesses like Bharat Banking and MSME and the mid-corporate segments. How we are creating a integrated play across partnership and ecosystems, and how we're delivering distinctiveness. If you recall the house of GPS, on the top of that house of GPS, we said 18% ROE. Last year, we added 2 elements there, which was around Bharat Banking and customer obsession, as we call it, project called Sparsh. You will have people come here on the stage, talk about what we're doing in Sparsh, and obviously talk to you about what we're doing in Bharat Banking. Where the sum of money which we're spending is going, one of this is this. We are leaders amongst peers to take the cloud-first approach. Avinash, our CTO, will come and talk to you about what we're exactly doing there. We have done integration of DexSecOps, led to 70% reduction in deployment time. One of the largest work-from-home cloud setups with 95,000 people, registered users there. We have 1,500 plus people now dedicated to our digital agenda. We have a 430-member in-house product engineering and design team, in-house. and we'll showcase to you what some of the stuff and what the work they have done. So I don't want to take that away. We believe that we are now emerging as a dominant player in the payment space, and it's very, very important. Look at the first 4 bars on the left-hand side and the 5 bars on the right-hand side, and look at our market share in credit cards, mobile banking, UPI, Bharat Bill Payment System, or IMPS. We believe this gives us the right to win in many spheres of banking space because the world is getting more connected, world is becoming more digitized, and because we are so dominant in this space, it gives us rare insights into customers. It gives us rare capability to go and underwrite some of those customers. It gives us rare capability to reach out those customers and make them offers at the right time so that they start looking at Axis as a clear alternative. Now, that is just the beginning. You will hear again through the day as to how all these dots are getting connected within the Axis Bank for a much brighter future. I don't want to say we are the first, among the first in UPI framework, first to go live on account aggregator framework. I don't know whether you saw RBI's circular yesterday that even the GSTN data will now be available on the account aggregator framework. It just continues to push and just re-endorse our strategy around pushing the account aggregator framework in a very big way, because I think we are way ahead of competition. We have the largest number of use cases in the account aggregator framework, and so on and so forth. Bharat banking is a huge opportunity, and everyone knows it. That's okay. Manish will also have some data around it. We have chosen this as an area of distinctiveness after a lot of deliberation. It is not that we said, oh, everyone is going to RUSU, let's do that. We believe that we had the platform, the maturity of the market was at a certain stage. By actually pulling it all together under one umbrella of Bharat banking, we could, over a period of time, be seen as a bank which is a dominant player in the space. That's why we picked up Bharat banking. We believe that the rural consumption is expected to grow up by 3 times, reaching $2.1 trillion by 2030. And it represents a huge opportunity for us. Forget about just the fact that it is an opportunity. We are underrepresented in that opportunity, and that's the data on the right-hand side. So there are headroom for growth for us just to get to a rightful market share, and then we believe that if we put in all our resources behind it, we can become a dominant player. And that's one of the reasons why we have chosen it. Some data at the bottom, we are already seeing very good traction coming through. But again, Manish will talk to you more about as to what are some of the other stuff which we're doing there. Same applies to MSME segment. If retail was the place to go to for the last 15 years in terms of growth in banking, we believe MSME space is the place to go to for the next 10 to 15 years. It is driven by some very obvious reasons: increased formalization, digital infra, government policies, all of that. And everyone seems to be very, very focused on it. It is also a high RAROC business for us. So we believe that that's a place to go, and we intend to continue to improve on it. And the data shows that. Our data shows that we have delivered growth in this segment combined, 28% CAGR over the last 3.5 years, including through the COVID period. 28% is our CAGR in combined MSME space. Our incremental MSME market share has now touched 11.25%. Please go and recall that our advances market share is only 5.8%. So we are gradually, slowly building market shares in businesses we like, which are way over what our traditional market share will indicate to you. And our market share overall SME space is about 7.2%. As the bottom says, our book size has grown by 2.5 times with 600 basis points improvement in the mix. So it's very important that we continue to push this particular segment as we move forward. Going on to the next slide, we believe that the world around us is getting more networked, integrated, and codependent. This is evident in the rise and strengthening of ecosystems and value chains. In this context, people who are able to integrate with partners in a real meaningful way, and not only about saying that you give me business and I'll give it to you, but because you're able to network and add value to what they are doing, we believe it can be a great proposition. Given our size, we are much more meaningful to a lot of these partners than some of the smaller banks, which seem to be doing all kinds of things. And the larger banks believe they're too big to be playing this full scale because they believe they can do it on their own. So we are quite uniquely placed, given our size. We already have 85+% partnerships across digital ecosystems. We have 350+ APIs. During the course of the day, you will hear testimonials from our partners who have shared their experience with Axis as their partner. So we'll not be saying it. Our partners will be talking to you about it. I think I'm going too fast, speak too fast. Let me just slow down a little bit. Siddhi is an app which we have developed. I mean, it's been a passion for mine. It's a super app that empowers Axis colleagues to engage seamlessly with customers. Now, you might think that this is only for front end. Our vision of Siddhi app is to actually personalize Siddhi for every employee of the bank. Right now, obviously, it will make sense to start with the salespeople. We will showcase to you the app itself and how it works. We'll have a session on Siddhi itself. But imagine that you're bringing all the data and insights and analytics which the bank has in a bring your own device app, which the salesperson, for example, can be a HR person also later on, but a salesperson can use to be more effective in front of the customer. Imagine that this is an app where basically you are taking the bank in front of the customer. And you can do anything and everything with the customer. You can sell products to them instantaneously, you can service them instantaneously, and so on and so forth. I don't want to take away some of the stuff which one of my colleagues is going to talk about, so let me just stop here. Sparsh is our customer obsession project. Again, something which we see can be an area of distinctiveness for us. If you go and survey the Axis employees, they very strongly believe that they score over others in customer service. But Sparsh is not just about customer service. Sparsh is all about ensuring that the customer experience end-to-end with Axis is at a level which has not been seen in India by anyone. We are aiming for an NPS score of 80. And again, we'll talk to you about why we believe that is the way to go, what is the kind of work we have done to get there, and how long this journey is, and what are some of the initial successes which we are seeing. But if you look at the data, 84% of the banks believe that this can be a competitive edge, but only 17.4% believe that it is part of their overall strategy. So everyone says it works. Everyone says it is important. But frankly, very few people are working on it. Because it's a difficult thing to do. It's a very difficult thing to do, which you will get a glimpse of when we talk to you about the kind of work we have done in this area. And if you look at the customer propensity to use you, the experience is great. That data is also shown here. 3.5 times more likely to purchase a product from you. 5.1 times they're likely to recommend you as a bank people should be banking with. They took the time off. Okay. I want to spend a couple of minutes on this slide. We have done the initial hard work and get the incremental benefits of the obvious hard things which you could do, and that is demonstrated in the matrix which we have given to you. We also are talking about a lot of transformation projects which are very specific to the business concern. So we might do a project for credit cards. It's called Zenith. We have got the lift. Great. Yes, there might be some adjacencies, which is good. We get the benefit of that. But the network effect of that is perhaps limited. Now, when we look at some of the platforms which we are creating in Axis, someone will talk to you about what our vision of Digital 2 is. Someone will talk to you about what our vision on partnerships is. City franchise is coming in. We are looking at universal underwriting, and we are also going after hyper-personalization, and you will hear about that. So I'm not saying just believe me, you will get to see and feel it. We are running some of the transformation projects. We're doing Bharat Banking. There is, as we said, Sparsh will impact every potential customer of the bank. Now, all these are feeding into every business of Axis. If we can get the customer experience right and make our NPS scores move to 80, we'll share the numbers, exact numbers later on. My belief is that the customer on the street, potential non-customer of Axis or customer of Axis, will start making the statement that Axis is great at customer service. You can go to them. That is what we want to be known for, that we dominate the Bharat Bank. We are great at customer service. We understand digital very, very well. Now, if we can get that right, it feeds into every part of Axis. So right till now, all the growth or all the changes were incremental. These platforms are multiplicative because they feed into every part of our business. And this is not a chart. I'm saying experience what we are doing in each of these areas through the day-to-day. And when you experience that, you will realize that yes, over the next 3-5 years, if these things work well, their sales force, their employees will be armed with enablers, which others don't seem to have today. And this is not an overnight effort. For example, Sparsh is an 8 to 10 year project. Bharat Bank will be an 8 to 10 year effort. Siddhi, I already told you, we've been at it for almost 24 to 30 months, and we have a clear vision in terms of what we want to do for the next 30 months. It cannot be created overnight. What we're doing in digital too, you will get to hear, again, the same issue. A lot of work has gone in. You can't replicate it overnight. You can't go and buy technology off the shelf and say, okay, let's do digital too. You have existing systems. You have existing way of working. Too many things have to be connected for it to make a difference. And I don't want to take what people are about to say, but to give you very simply, if I want to give an offer to a customer, just for a loan, for example, on any channel, anywhere in India, any time of the day, just think through what you will need. You first need an ability to collect all kinds of data. Then you need the ability to crunch that data. Then you need the ability to using that data which you have crunched to underwrite a customer. Then you need the ability to, when the customer comes on a platform which is connected to you, either through partnerships or otherwise. The moment you say partnerships, every partner requires a separate technology connection. You might have all the APIs in the world, but still always a niggle which you need to connect to. So let's say a customer comes to a partner and you recognize that customer, oh God, based on the data that customer is willing to give to you, you have to go to all the systems where you crunch the data, you underwrite in the customer and give them an offer which is personalized to that customer. Then you need to build a journey where you can actually underwrite, you build a journey where in 3 clicks you can actually give to the customer the loan they want. Now, I'm simplifying it, but imagine these are all the things you have to do. You can't do it overnight. It requires so many things to come together. It's a 3 to 5 year effort to be able to do it at scale across India. And that is what I'm trying to tell you, that all the money which you've been creating, all these platforms which you've been creating for the last couple of years is hopefully going to give us, and I'm only saying hopefully because I have to be conservative, otherwise Puneet will kill me. I'm very confident actually, but hopefully it will give us the platform which will allow us to start dominating some spaces in a way which we have not done in the past. And hopefully that's what you will see today. It's not all done. A lot of it is still in play, but the initial work in almost all the cases has happened, and you will be able to touch and feel it and say, okay, this is something different. So that's what I want you to look forward to today as we go through some of these data points. I still have 10 minutes, but that's okay. Okay, so I think our strong performance in the last 3 years demonstrates our ability to translate intent. We have been talking about a lot of intent since we launched the GPS strategy, to action and towards delivering strong outcomes. So I think we've moved from intent to delivery, and now these strong outcomes have started coming out. I've also been trying to make one simple point, that whatever we are trying to do is not meant to be one-off. It is meant to be sustained, secular, granular, and want to push the fact that we are becoming a premium franchise over a period of time. We are strengthening our capability. I think if you look at, you'll get to interact with a lot of senior people through the day, and you will get, I hopefully get a sense that we have collected a set of individuals who have been in the industry, who have vast experience, fully charged up, and they know what they have to deliver over a period of time. We talked about the bank's digital capabilities and its connect and grow philosophy to ultimately deliver a multiplier effect. It will take some time because it is a journey we are on, but we do believe we can deliver on that journey as we continue to move forward. Sorry, Abhijit, I saw somewhere. We have finished earlier than expected, but I tend to speak fast, so I hope it's okay. So great, thanks a lot.